There are 130 new insider trades filed, almost all of them totally useless, but we'll look through them all to find those handful that are high signal and can help us outperform. Let's take a look. I've started getting the data dashboards back up. One of the cool new ones that we're introducing here, I haven't gotten the full dashboard done yet, so we'll just look at this one for now, but one of the cool new ones we have is this insider sentiment score, which is basically more or less we remove all of the low signal insider trades and then we aggregate the amount of buying versus the amount of selling, and then over the previous 3 months, and then we chart that on this kind of nice rolling chart. And the thing you'll notice is that the huge spikes in bullishness, which really once it gets above about 30% bullish, then that is a very bullish threshold, as long as it's sitting above 20%, which you see it is sitting above 20% most of the time because the stock market does tend to go up. So most of the time insider sentiment is also bullish, which is right around that 20% mark. But when we pop up above 30%, you'll notice that it very, very nicely matches with some of the best returns over the best periods to buy the stock over the past 10 years, almost always with big dips. So you've got the beginning of 2016, you've got the COVID dip here, or not this is the end of 2018. I mean, this is the end of 2018, beginning of 2019 dip, then you've got the COVID dip over here, and then you've got the middle of 2022, and then you have these next two times that touched were the middle of 2023, and then this was when the sort of towards the end of the tariff situation there between April and June, essentially. And obviously the market with very good performance after those periods of time. So you can see here we can use this insider sentiment. Again, when it gets low, I mean, it does again. And when it drops below 20%, there's some reason for concern, but it doesn't mean necessarily that the market's going to go down, just that the market will underperform sort of the average over the time period that the S&P tends to go up. So right now we're sitting here right in the mid 20s. So, you know, a bullish market, nothing to write home about, not the most bullish that you'll see, but you can see it's started to creep up a little bit as some of these deals and these tariff deals have started to come in, and as the Federal Reserve has started lowering interest rates and some of those things. So creeping up a little bit, but I'd say firmly in the bullish stance, but still a ways away from what we would consider the most bullish positioning from insiders. So let's go to CEOWatcher.com and let's take a look at some of these insider trades. There are quite a few interesting ones today, so I don't know how many we'll actually get through here, as I still haven't had time to get through all of them. So of course that's one of the reasons why you should go to CEOWatcher.com and sign up so you can look through them all yourself, but then that also gets you on the email list where you'll get the daily email with a bunch of my notes, and then I'll also put you in the Discord channel where you get real-time alerts, and you also get a lot more notes there as well. So starting at the very top here, we can pretty quickly just skip past this one, Catalyst 4, buying the IPO, not interested in IPOs. Here we've got another one, Red Mile Group, participating in a private placement at ADC Therapeutics. Again, private placements from 10% owners, just not of much interest to us, so we'll skip right over those. We've got Arch Ventures here buying NMRA Therapeutics, which is another one where it actually, one would think normally when you see this $5 million purchase, we'll go take a look. One would think this would normally be some sort of public offering, private placement, something like that, just because $5 million is such a perfectly round number. But you can see 261 is not really a price that you would normally consider to be a private placement. If we read down here, it's basically just telling you who owns these funds, which is the different Arch Venture funds here, all basically the same thing. So just at quick glance there, it doesn't look like that was part of a private placement, which then we can go actually take a look at the news here. And I don't see any news about them doing any private placements either, so, or public offerings or anything like that. So it doesn't actually look like it is part of a private placement. But even still, we normally don't pay much attention to 10% owners. However, in this case, it was moderately interesting because if you go take a look at Arch Venture Group here, I guess they actually do have pretty terrible returns. But you'll notice that the person working at Arch Venture Group is this Kristen Burrow, who is on represent shares held by Arch Venture. So this is the actual person that works at Arch Venture Group that's sitting on the board here at NMRA Therapeutics, and she actually has quite good returns if we take a look at her historic returns. So we can see not very good 1 month, but we got 9% 3 month, 31% 6 month, 64% 1 year. Pretty good returns over the following year or two, right? But this stock has been got crushed 80% here. So obviously all of these latest returns are going to be way down as the stock fell 80% here. So regardless of when you bought in, and if you bought in any time before this, you got hammered right here, which is the case with her, as she bought a handful of times in 2023. So in 2023, stock then went up over the next, 4 or 5 months or whatever. It went up a little bit before falling down, flattening out, and then it obviously fell off a ledge there. But she actually she did okay during that time, was able to get pretty lucky that the stock had recovered here in October, November timeframe. In this case, I actually think overall, looking a little closer at the overall returns for her, I would say that these aggregated returns don't quite reflect the quality of her insider trading acumen, which also another way you could quickly kind of gauge this is to look at the buys, which you see 64%, but then only 6 out of 13. So a 50% win rate means you're really benefiting from just a handful of trades that worked out really well. So in this case, like this one had 191% returns, this one had 98% returns. Those are really doing a lot of the heavy lifting here to kind of juice the returns here, even though her overall returns are not quite probably as good as this would suggest. So especially when we look a little closer, like, okay, these handful of purchases actually ended up working out okay for her because of just how the timing sort of worked out. But overall, I would say this looks more like she just kind of got lucky that the next peak happened to happen right around the same time that she had purchased back here, right, in sort of November time, and then the stock had peaked up here around October, and so around November it was still right around here. It was still doing okay, still up about 20%, even though it was getting ready to fall off a cliff. So overall, this one to me is just a pretty quick pass. The only thing that makes it sort of interesting is that a bunch of people decided to really get into they really enjoyed the insider purchase here. A lot of investors followed on. Normally you don't see pops like this at companies where just a 10% owner is buying, because again, 10% owners tend to be a lower signal. But in this case, I think there's already a little bit of bullish sentiment because of October 23rd, they found some positive results from an obesity drug weight loss study they were doing in mice, which a lot of these smarter biotech people that I follow were pretty skeptical of how this is going to go in the future, but it certainly got a pop. I mean, rightfully so. It's better to have good news than no news, but they got a pop here, which I think already kind of gave a little bit of a boost to the sentiment around the company. And then you had Archrock or Arch Ventures, whatever they call themselves, coming in with a $5 million purchase, got another boost here, which again, I'm a little surprised by that, just from, I don't know why you'd be copying 10% owners necessarily, but to me, this one I'm going to stay away from. I think on the surface, this insider purchase by Christina Burrow could look interesting when you just take a look at her previous returns, but I think as we dive a little deeper, these returns seem just a little bit fortunate with the timing and not as high signal as they might have been otherwise. Moving on down, we've got here another insider 10% owner at a pharmaceutical company. In this case, though, we can just see, I mean, while he does like to buy the dips, and he has successfully bought the dips quite a few times, his overall returns are pretty terrible. So these actually look like they'll work out okay for him, but he must be an insider at a different company as well that has not worked out. Guess not. I guess these are just these returns. So in this case, it might actually be, I'd be interested to see if this is a little bit more of so the chart's only going back about 2 years. We're working on extending this, but right now we're only going back 2 years, so we can actually see a lot of these returns here, basically all the way up to here from early 2023, which were all very poorly performing. So as we can see, just a string of red, which kind of makes sense because they're all kind of within 2 months of each other. So of course they're gonna all look pretty similar. But overall, this guy's return, he's basically maybe 2 times has he sort of timed it well. You know, like down here was a pretty good purchase. Down here was a pretty good purchase. In these cases, not so much. I mean, here he got real lucky that the next week it shot up. But overall, another case of just an insider with not very good returns right here. So to me, it's just, and a 10% owner, as we mentioned already, a lower signal. So a pretty easy skip for me, as we can find some more interesting things to take a look at. IRDM Communications here, taking a look, another insider with just particularly crappy returns. Let's just go verify that his returns aren't that good. We can see quite a bit of history here, 35 or so total trades. As we look down the 1 year line, we can see that, I mean, not even 50-50, so a little less than 50-50 in terms of what the returns are. Got crushed down here, it looks like. So overall, his 1 year returns not very good, which these longer term returns tend to correlate a little better, like 1 year, 6 months, 1 year tend to correlate a little better than the short term 1 month or 3 month. But again, 50% win rate, but negative 26 returns. Just to me, not worth enough to actually take a deeper look here. Just wanted to see if there's any notes on the filing, but it looks like a pretty normal purchase. So I mean, unless there's like something crazy going on here, which it looks like somebody's actually selling the stock as well. So that's another one. Somebody selling on the same day that somebody else is buying is will also put a damper on things. So another pretty easy skip right there. Moving on to Eastern Bank shares. So this is one we actually already looked at yesterday, and this obviously now makes it a little more interesting. Again, I tend to stay away from banks. Unless the insider buying is so bullish that it forces me to just suck it up and buy it. I don't really like banks. I don't know that industry very well. They don't really fit kind of my investing style or what I'm interested in. So I tend to stay away, but we now have 4 different insider buys. Well, actually there's a lot more back here. There's a whole handful of insiders buying back here. So 5 insiders buying back here and then 2 more right here, all at about the same price, roughly speaking. Pretty big size too. We got David Rosado here, the CFO CFO buying increasing their holdings by 71%. Obviously very notable, $340,000 purchase. Take a note here, or take a look here, no notes, bought at about $17. So stock price is still about there. So now we've got a couple of buyers, and it was already kind of interesting yesterday, which we don't need to go through this whole thing again, but basically this guy, who I believe is just a director, the exec chairman had bought the stock. It was his largest purchase ever out of 4. He had a pretty good long-term returns previously, even though it doesn't look like they're being, well, as you can see, it's only this one previous purchase that he had done before, which I'm not sure why. I'll have to check why it's not populating up here, but you can see a nice 79% one-year return, 65% 6-month returns. So obviously back in 2020 worked out very well, and then took a 5-year hiatus before making these 2 purchases. So in that case, that makes it pretty interesting as well. They also, the one big other thing here is that they announced a pretty massive share buyback program. So they're completing a merger that should go through in a couple days here, but then they announced a new buyback plan where they were going to buy 11.9 million shares, or 5% of its outstanding shares, over the next 12 months. So obviously if they actually follow through with this and they eat up 5% of their own shares, that's obviously some positive pressure on the stock as well. So now you've got a handful of insiders buying the stock. I guess we didn't actually look to see if this guy's previous returns. So it looks like he as well, only 3 previous purchases, as we can see here, 57%, 43%, and then this one looks like, when did he buy this? That's a sale. When did he buy this? Earlier in this year, so this one looks like it's actually going to work out pretty good as well, as he bought as the stock is up about 10% since then. So probably not going to quite get to these numbers of 40 and 57% one-year returns, but I think it's going to probably be somewhere in the 10 to 20% range, which is still quite good, especially at a bank. And you have obviously now buying the stock again, which is pretty compelling. So I think overall you've got a pretty, again, I'm not a big bank guy, but it's about as good as you're going to get at a bank with these 2 insiders with a pretty good track record buying the stock, plus the share buybacks, which obviously there's some research on. Share buybacks combined with insider buying, bullish signal for the stock price to increase going forward. So I think that's just a pretty high signal, very high signal really, insider purchase there. I'm going to skip over Origin Bancorp just for a second, because we also took a look here at RYES Gold Corp the other day, which now you've got a couple of insiders buying the stock. As you'll remember, this one I'm not going to fully dive into again. Obviously only at 20 cents. This one we kind of immediately come in a little skeptical because it is part of a public offering, public offering, or I don't remember if it was a public offering or a pipe agreement or what it was, but either way, it was an offering of the stock where they bought the stock for 25 cents, and then they also got a 45-cent or a warrant with a 45-cent expiration. Stock's only trading at, 20 cents now? Yeah, only trading at 20 cents. So the stock has to go up 2.5x just to get to that 45 cents mark where they even start making money. And the 45 cents does expire in just 3 years. So within 3 years, stock has to go up over 2.5x just for them to start making money on the warrant. So obviously you've got to be pretty bullish in that scenario. And then even still, they bought the stock at 25% higher than the current price. So in that case, it actually is, we tend to avoid these public offerings, but that is a more bullish public offering for sure. Because a lot of these public offerings, they'll do them at a discount, or at the exact price of the stock. They'll get the stock and the warrant at the exact price, or even at a discount. And in this case, they're actually paying more for both of them. So I think that can be bullish. And then you'll remember the story here, though, is just a specific legal situation. They're trying to reopen a mine. Basically, they're trying to go reopen the mine, and they had a whole study done to see what the environmental impact would be. They believe it wasn't going to be too bad, but then the county said, no, you can't do it. And now they are waiting on a court decision as to whether or not they can go do it, or whether or not, which they believe will happen in early 2026, whether they can go do it or whether they're not going to be allowed to. And then they claim, the executives here at RYES claim, that if they're not allowed to, that means that the county is taking their mine, but whatever the legal term is for literally stealing, quote unquote, stealing the mine away from them, in which case they'll be owed recourse of $400 million, they claim. And the company's only trading at like $25 million valuation. So obviously if they were to get $400 million, that'd be a big win for them. But pretty tricky legal situation, and all of that is told solely from the side of the management team and their beliefs, and they obviously want to believe that they would get a ton of money if the court blocks them. But I'm sure that will not be nearly as easy of a process as it may seem. That is probably a long, drawn out situation where maybe they get that money, or very likely they don't get that money. So that situation would require a lot more work for me to want to take a stab at. But this fundraise was basically for them to have enough money to make it through this legal battle. Moving on to Origin Bancorp here. This is so we've got another bank one, and in this situation we have a ton of insider buying. look at all this. 9 different insiders buying the stock, which is something that we will almost never see. Very rarely will you see all these insiders buying the stock. Let's just go verify. I want to make sure this isn't actually part of a... Yeah, so these aren't part of an employee. They're just telling you some of the stock they own is part of an employee stock purchase program, but not this one actually. And there's really no flags on any of them, which this one is a little surprising to me. Just, how often are you really getting 9 insiders buying a stock that's not part of some sort of public offering? But from what I can tell, we don't see any news of a public offering. There's no filings that I could find. Just a bunch of executives, including the CEO and then 2 directors that were buying the stock here. And you can also see there's only one previous time. Well, one, you can see that nobody's bought the stock at all in over 2 years. There's been no buying. And the last time we had all this group buying was back here in 2023. May of 2023, you can see again, I think we had somewhere around 9 or 10 insiders buying the stock. And then if we come way over here, the stock went up about 17% in the next year, but was up about 20% in the next 3 months. So that's the only, there was one other time, I guess, down here where they all bought the stock, but this was part of the IPO. So that we kind of excluded. And in that case, it didn't actually work out quite as well. I mean, 7% in 3 months, down 7% in a year, obviously didn't work out nearly as well. But besides that, this is the only time we see a little bit of group buying here during COVID, which I would imagine worked out very well on the long term, up 90% there. Any other group buying, and then just kind of a handful of buys and sells, and then you get, boom, the huge group buying back in May of 2023, up 20% in the next 3 months. So big group buying, and a history of a pretty good track record of group buying before by these guys definitely makes this notable. If we take a look at some of the win rates by some of the insiders here too, you can see the ones that have made previous purchases all are averaging about that 20% 3 month, which, probably because they also participated down here 2 years ago. So big gap between the last purchase, tons of insider buying. All of that certainly makes it a very, very high signal insider trade just from the trading standpoint. Now, if we go look at some of the news, all of the banks recently reported earnings, so we can pretty easily get a sense of what that's going to be. You can see they took a huge hit in their 1 year earnings estimates, even though it didn't actually affect the stock price. And the reason for that is just because the hit was due to the Tricolor bank fraud, or Tricolor, whatever. I guess I don't remember exactly what Tricolor did, but Tricolor was found committing fraud, and then they went bankrupt, and then they had to do a huge write-off here. As we can see, a 59-cent pressure from the Tricolor fraud charge-off impact. And the Tricolor CEO was actually on the board here at one point in time too, which also not a great look or situation, but they kicked him off the board recently. So there's not much. Again, banks not really my industry, so I'm not great about figuring out what exactly is the story here, and what does their valuation look like. I mean, I guess we know we can go look at like price to book value here, which looks like it's about average of what they've been over the last few years, except for when they were coming out of COVID, which I'm assuming is probably a inflated situation. So not a ton of history here, kind of hard to know, but I think I would put, 1x is pretty reasonable for where a bank is, so I don't think this is like a crazy undervalued bank or anything. I don't honestly really know what exactly the story here might be for why they believe that the stock is going to be worth more over the next year or over the next couple quarters, but all we know is that last time they bought the stock went up quite a bit, so that seems good enough for me. They do mention, let's see, some flat loan growth, some mid to high single digit loan growth in 2026 based on a strong pipeline. So I guess, okay, maybe they're just seeing some a strong loan pipeline. They also they guided, it looks like, to 2 rate cuts in October and December. Maybe, I guess, the Fed doesn't decide to cut both those times, but in which case that'd obviously be a positive for them and their net interest income. But so right now they're at least guiding toward that. Strong Q3 deposit inflows, and they did have to slightly lower their non-interest expenses. Well, I guess that's good. They got to slightly lower it. So I don't really have much else to say here. I'm not a big bank guy, as we know. Maybe they have a strong loan book that they think is going to work out good for them, or maybe they're all just buying the stock to try to show some solidarity and some confidence with the whole Tricolor fraud situation. So maybe that's what's going on as well. I'm not entirely sure. The only thing I know is this is quite a high signal insider purchase because you got a group buying, and we saw the group buying before, and it worked out pretty well. Let's take a look at one more here that's another pretty interesting one. Another industry that I kind of hate is REITs, and yet here we are with a very, very interesting REIT purchase by a director. I don't remember who. By a director here. Again, look at the win rates here. 75% 1 year, 40%, 6 month, 20%, 3 month. This is like the only thing, no real other insider buying. That we did have a handful of insiders buying the stock back here, which worked out quite well as the stock's gone from 27 to 32, which, you know, especially in REIT land is pretty good when you consider this REIT probably pays out a 10% dividend or something along those lines. It looks like this one was a spin out. If you were to read this, it looks like they were a spin out from Leonard, which also always a nice, you know, if you're a special, you know, a Joel Greenblatt fan, you know, that was one of the spin-offs or one of the type of situations he really likes to take a look at, as it can cause some mispricing. So you have that spin-off that happened here in February of this year, which is a nice dynamic. If we just take a look here at this director's past performance, I mean, it literally doesn't get any better. Green across the board. The stock has always gone up from the 1 month to the 1 year after he has purchased the stock, and it's gone up quite a bit, especially when you consider what we're looking at. Like, this is a REIT. This one, I guess, is a metals and mining company, so those do tend to move a little more. But 140% returns on here, 30% 6 month down here, 17, 22%. Overall, it doesn't get much better than this from an insider, from an insider returns perspective specifically. So this I'd mark as a very, very, very high signal insider purchase. We can go take a look at REITs, but again, to me, this one would be I don't know the REIT industry very well. I have no interest in really learning the REIT industry all that well, but we can quickly take a look at that their earnings, if we just take a look down here, came in a little, their revenue came in a little higher than expected. Analysts expected 172. They came in at 179. They came in at 74 cents per share, which they were then able to raise their guidance from 70 to 73 to 74 to 76. So obviously what seems to be pretty good earnings there, as they were able to beat and raise guidance there. And then if we go look at their dividend yield here, 9% dividends, that's pretty nice. So, you know, if we can get another 20% quarter out of them, as his previous purchases have led to, you get 20% from the stock increasing, plus you'll get another couple percent from the dividend, what would be a very, very successful trade. Obviously, this thing's not going to shoot up 100% on us in the next 6 months or something like that. But for me, this would be the only reason this would be the only way I'd ever decide to buy a REIT, is when you have a insider with such a strong track record buying the stock like we have here. So as I mentioned, I've still got more of these that I need to look through, and I'll be sharing those notes in the daily email tomorrow if I come across anything interesting, and they'll be shared in the Discord as I just kind of look through them. But you can take a look, you know, a handful of buyers here at First Financial might be interested to look at. This CEO here has been buying RVP for quite a while. Most of these purchases, just a lot more of the Origin Bank share, which we've already looked at, a lot more of, or another First Financial, which we already looked at. Looks like, let's see if this one's actually a dividend reinvestment, includes dividends. Again, it says dividend reinvestment, but it's just being counted in the amount purchased. So here you've got a director buying Hemung, I'm guessing, Financial Corp. I don't know what's going on there. Looks like he has a pretty an okay track record, I guess, 13% returns, but maybe worth looking into there. Who do we have here? Goosehead Insurance, another industry I don't know all that much about. Terrible returns, so that's a pretty easy one to skip. And we haven't even looked at the sales yet, but tons of stuff to look at there. So feel free to go to CEOWatcher.com. That'll sign up there, put you on the email list, and then if you upgrade, you can join the Discord and the premium email and all that fun stuff. Don't forget to like and subscribe, and we'll see you next time.